probably Q2 would have taken, seen the maximum impact of the wage hikes that IT companies generally schedule. Most of the wage hikes that tend to come from July 1st onwards, and clearly they do not have enough levers besides the pay cuts on variable pay to sustain the margin guidance that all of them have provided. At this point of time, it has been reported that Wipro, TCS and Infosys, three big IT companies, have taken or have scheduled pay cuts in terms of variable pay of their employees of certain grades. Of course, it's not company-wise, but it's of certain grade. I think, Santo, probably, we are seeing the shift in the IT labor market probably with this, given the fact that startups themselves have become quite unattractive as a job proposition for a lot of tech workers out there. Clearly, the bargaining power now has shifted back to IT companies from the IT tech workers. And overall, I think this is something that management of a lot of the IT companies had guided for in Q1, that they expected attrition rates to probably have peaked in Q1 and they would expect a moderation going ahead. And clearly with these pay cuts also coming in, I would expect that margins should start improving on a sequential basis from Q3 onwards for these companies.
Well, CJ, at this point, what this pay cuts cut in variable pay seems to indicate is that IT stocks are no longer trying very hard to retain talent. They obviously know
it's
that
become easier basically.
Yeah, they know that if you cut pay, obviously some people are going to be unhappy and leave. Till some time back, they would go all out to retain talent, which is why you saw salaries rise quite fast, and now that no longer seems to be the case. So to me, CJ, this indicates something deeper. If you're not trying very hard to retain talent, you're okay with some bit of talent going. Now remember, you said that there are certain grades where variable pay has been cut, so it's most likely that it would have happened at the senior levels, where the companies then can actually save on margins. You wouldn't do it at the lower end, right? So if you're okay with keeping your more senior talent unhappy through pay cuts, it obviously means that probably you're not seeing the same kind of order visibility or the same kind of demand that you had seen in the past, that you would need so many people to.
It could also mean that you would expect that the middle management upwards of middle management, a lot of the employees would be much more stickier in nature compared to say at the lower rung of the pyramid, because generally people who are at the bottom rung would be much more finicky in terms of if you get a pay cut, you can easily switch a job. But probably middle management onwards, as a company that probably they would not be that easy to jump ship, for them compared to somebody who is a fresher.
Fair enough, point taken there. But again, if you see, there's a good possibility now that the mood in the global markets has changed. Things could start getting a little tough for IT sector. Once again, the chatter around recession is now beginning to get louder. And just in a matter of 2 or 3 days, from Fed will ease, it has gone back to Fed will tighten aggressively. You already have signs of recession in Europe. So things are definitely not looking back in key markets for the IT sector. And already there were some indications of it in the conference calls, post-earnings conference calls by these companies. And market has been cautious on the sector for a while now. If you see, the stocks did rebound, but it was in line with the rest of the other sectors. You have not seen some huge outperformance there. So that being the case, it seems that at least for the timing, the best of tech may be behind. You would likely see market returns from here on. CJ.
Well, I think, Santo, I would not want to down my tools so soon, because the Q1 commentary overall, if you look at it, was still quite, generally quite optimistic from most of the companies. You talk about big IT, you talk about mid-cap IT, all of them seemed quite buoyant about the long-term nature of the demand that they were witnessing out there in the market. I think for me, the performance of IT stocks will now be very crucially dependent on the Q2 commentary, how that happens, because now they would have had 6 months of understanding the market, understanding the demand scenario, and even after September quarter, if we see same level of optimism being retained, I think then you could see some of the longer term investors trying to take opportunity of the correction in valuation that we have seen in the IT space. And I think that is why probably if that happens, then we could see a good uptick in the sector in the second half. And if that doesn't happen, then probably it will add to the concerns and of course the reasons for the sell-off to continue in IT stocks going ahead.
Well, prices may have corrected, CJ, but it also depends on what kind of earnings visibility that investors see, for that matter even the companies see. If they don't expect the growth rates to be as scorching in the past, then probably the correction in stock prices doesn't mean much, because it means that the prices are then adjusting to the
newer growth scenario.
Growth scenario.
That is true,
Exactly.
Santo, but I think I still feel that, the sort of long-term nature of demand that a lot of the IT companies, especially big ones such as TCS and Infosys, have been talking about, I just feel that probably even if a recession, Goldman Sachs came out with a report last week saying that even if a recession is triggered in 2023 in the US, it is very likely to be a mild one instead of a very deep sort of a recession that probably we saw back in 2008 and 09 and probably during the COVID pandemic. So clearly, I think even if a recession were to happen, I don't think it will affect the long-term trajectory of the IT sector in terms of growth, in terms of cloud transformation deals. And I think that is where a lot of savvy investors could start taking opportunities of the correction that we have seen in the sector. Well, moving on, Santo, let's take a quick look at how the trade setup is for today's session. And clearly, it is a weak session that we have on the offer. If you look at the Nifty futures on the XGX, they're indicating almost 50 to 60 points cut for the benchmark index. It will be third straight session where we would see the red, splashed all across the screen on the market. The cues from or the handover from Wall Street were also quite negative. Most of the benchmark indices in the US fell quite sharply, more than 1%, largely on fears of what Mr. Powell, the US Fed chief, will talk about rate hikes in the upcoming Jackson Hole summit later this week. And apart from that, the major driver of all of this pain is clearly the US dollar. The US dollar is now edging closer to 109 handle, and oil prices also saw a minor rebound after there were reports that Saudi Arabia could look at tightening supply going ahead at the next OPEC meeting, given the fact that oil prices have slumped so much from $125 per barrel.
Well, that was the fundamental side of the story, and here on the technical side also, if you look again, FIs have started being more active on the sell side over the last few trading sessions, and that's a big cause of worry, because so far the general belief was that renewed interest from FIs could kind of provide a downside support for the market, but that does not seem to be the case. Yesterday, both foreign funds as well as domestic funds were net sellers.
Yeah, I think Santo, both of them, and probably, but if you look at the quantum of the selling, it didn't seem so much as to it didn't collaborate with the price action that we were seeing. And I was just a little worried whether we saw all three, being sellers yesterday, in the sense that probably even retail investors panicked a little bit, given the sort of deep cuts that we were seeing in the small cap and mid cap space.
If everyone sold, then who bought? Somebody
exactly, somebody would have to maybe prop desk players.
So global market cues will be the key driver of sentiment,
Definitely.
at least in the foreseeable future. And so far, you had seen India outperforming global markets by a good margin. Now, going forward, I'm not sure whether that's such a high probability.
And I think, Santo, you have merit in that argument, because if you look at India compared to say the emerging markets peers, at this point of time the MSCI India index is trading at 103% premium in terms of forward valuations to the MSCI emerging market index. That is almost twice as expensive as everybody else out there. And I think then you start questioning, in an environment of higher interest rate, higher bond yields, you start questioning whether you want to pay that much money to buy a market which may only give you high single-digit returns.
Well, with that, let's take a look at the stocks on our watch list this morning, starting with Lupin. Again, a steady performer. The stock had fallen to about 590 levels a couple of months back, and despite the overall outlook on earnings being quite disappointing, the stock has been steadily inching up. It has risen close to about 20% since then. The first quarter numbers were disappointing, but the company has outlined the steps that it's taking right now. It's in the midst of a portfolio restructuring process as well. It's doing away with some of the low margin products. Besides, it's quite upbeat on the prospect for Spiriva, and also the clearance of its Indore plant probably could result in a huge opportunity, almost $300 million over the next 2 to 3 years, according to brokerage house Nomura. And the big worry for this company has been the erosion in the prices in the US market, but the pace of that erosion has appeared to slow down a little bit. Besides that, the quarterly India business performance was quite strong, 5.6% growth excluding the COVID business, and the company is hopeful that it will continue to see strong growth in the India business for at least the next 2 or 3 quarters. So the stock appears to have bottomed out. At least most of the negative seems to be priced in at current levels.
The Santo India business might be strong, but India business doesn't contribute too much to margins. So if you're looking for profitability, you need that US engine to start working again. And clearly, I think that is where a lot of the pressure is, a lot of the attention is. Price erosion is still quite high. The company has not been able to launch much of the many new products over the past 2 to 3 years because of the regulatory issues many of its plants have been facing. If you look at the Goa plant, clearly that is a big positive, of course, because that recently received clearance after almost 4 years of issues. But the Pithampur unit is the one where there are still a lot of problems. They had an audit in May. Apparently, after that, media reports came out. They almost ended up firing 300 people from that unit because it seemed, or the indication was, that the audit didn't go according to plan. So clearly there are a lot of issues still with Lupin. And if you look at the the recent buoyancy that we are seeing in the stock, the rally that we have seen, it is coming on the back of just hope. There is no earning traction yet. Lupin has been disappointing for the past 3 to 4 years when it comes to earnings expectation and meeting its own guidance. And I would expect that until and unless the earnings delivery now comes, I think upside from here would be very, very limited, because you can only go so far based on hope, Santo. So I think delivery on earnings and on the management's optimism would be very crucial for the stock going ahead. Well, one stock that is probably going to be in focus today is Eicher Motors. The company, brokerage from CLSA India came out with a note on the stock, and it made a very interesting point. If you look at Eicher's journey over the past almost 15 years, clearly the past 15 years have defined the company. If you look at the volume growth that they have seen, Santo, between FY12 and FY19, they grew their volumes by more than 30% on an annualized basis. Now, CLS's argument is that a lot of the buyers of, say, high-end premium two-wheelers over the past 10-15 years would be looking to replace those bikes in the next 10-15 years. And now, if Eicher can probably capture almost 80 to 85% demand, given its leadership in the high-end, two-wheeler segment, that in itself could be a major kicker for volume growth going ahead for the company. And I think that is what also CLS is betting on. They have a buy rating on the stock and almost about 4,450 rupees of price target. And also, let's not forget that Eicher this year is looking to revamp its entire portfolio. It is looking to launch a lot of new products, and there is a hope that from festive period onwards, we could see a very good revival in demand.
Well, the stock has had a decent run of late, and a lot also depends on the kind of response the company has been getting to its latest launched Hunter model. But there have been disappointments in the past also with the previous couple of models. So analysts are keeping their expectations a bit tempered. And according to Nomura, the company may face some headwinds in the export market also, given the changed mood in the global markets all of a sudden. That's one thing. And according to Elara Capital, there's a risk that sustained increase in prices may at some point make its products unaffordable. Besides that, in the low per capita income states, it's managed to improve its market share, but now it's likely to hit the ceiling. Already in the high per capita income state, the market share now seems to have stagnated around between 5 to 8%. It's been steady there for a while now. So growing market share on a sustainable basis, that is the biggest challenge for Royal Enfield at this point in time.
That is true, Santo. I think, but I don't think Santo Royal Enfield is trying to just focus on the India market. I think it's the export market which is the next big leap for the company. Siddharth Lal wants to take that bike across the world, and if you look at some of the reviews that come out from international magazines, clearly this concept has been well received. We just now need to see the delivery on volumes.
Well, with that, the market has opened. It's a bleak start, 133 points down.
Wow,
that's a very sharp cut.
Yeah.
Indeed, the SGX Nifty was not indicating such a sharp cut, and the breadth is negative. So selling pressure in second line stocks continues. 1200 stocks down and just about 600 up at this point in time.
Yeah, and Santo, if you look at, it's the mid cap space that has taken the most beating at this point of time. The Nifty mid cap 100 index is down about 0.9%. Almost Nifty small cap down about 0.6%, and the India VIX is now creeping towards that 20-point handle. Clearly, a lot of short positions are being added. Well, it'll be interesting to see, because today is already Tuesday and we are just 2 days away from the expiry. Generally, you tend to see some squaring off of position happening from the second half of Wednesday. So it will be interesting to see whether we see a sharp rebound on Wednesday and Thursday if shorts were to cover their positions, Santo.
What about unwinding of positions? Because
That
the
is
market
I
has been
think-
rising
I
very
think-
sharply, so you would have a lot of people very
True,
long
true.
on-
I think the past 3 sessions we have seen a bit of unwinding and a bit of short positions being taken in the market. But given that the square off is so close, it is possible that we might see a minor rebound. I would not say that it will be probably something sustainable at this point of time, because you clearly cannot make a proper guess on this market given the way it has been behaving.
Well, next stock on a watch list is Gillette India. Now, CJ, the stock just caught my attention. This has been one of the stocks on which great investors like Mr. Radhakishan Dawani and Mr. Rakesh Jhunjhunwala had burnished their reputation back in the 90s. It used to be quite a favorite, but since then it has fallen out of favor with most
Maybe I
market.
had some contribution in that.
Yeah, people like you definitely have a role to play in the stock not doing all that well. That said, there was a huge deal. Volumes shot up very sharply in
Santo,
Gillette.
just before you start, I think the person who should be most blamed is SRK in Chakte India. He was the one who got the beer trend going in India.
Stubble trend. Well, so big volumes in Gillette India yesterday, around 75,000 shares changed hands, which is almost close to about 20 to 30 times the average volume in that, because not more than 2,000 or 3,000 shares change hands on a daily basis. So huge jump. But again, surprisingly, delivery volumes were very low, which indicates that probably it is HNIs, speculators, which have got into the act. The company has been a very steady performer there, but over the last 3 or 4 years, the growth in top line and bottom line has been quite sedate if you look at it, but it's been very consistent. Also, very strong balance sheet there, no borrowings, plus a return on equity of close to about 35% last year. It's been consistently in the around 30% for many years now. And besides that, the company has also been maintaining its margins quite well, around 21%. So steady performer, I would say, but one which could come into focus if the overall market becomes choppy.
True, Santo. I mean, probably if you're looking for a very defensive, low risk sort of investment where you're going to get decent amount of dividends every year, I mean, this is probably one of those boring stocks, as they call them, which Warren Buffett used to invest a lot in. Clearly, I think if that is your play, you can go ahead with it. But I think overall, if you look at the earnings for the June quarter, they clearly have been boosted by the return to office that we have been seeing. Because of that, a lot of pent-up demand in the economy has boosted sales. If you look at on a year-on-year and even on a sequential basis. But I think one would expect that pent-up demand to now fade out in the coming quarters, and it will be interesting to see will we go back to the same revenue growth and net profit growth trajectory for the company as we have seen over the past 5 to 6 years. So not an exciting stock for me. Probably yes, if you're a low risk, very risk averse investor, go ahead, please take it, but not somebody who's chasing growth in this market. My last stock, Santo, is actually a small to mid cap name known as GMDC. It's a PSU stock, and well, if you look at the company's performance the past 1 year, you would not even believe it is a PSU company. The way the turnaround has happened at GMDC, clearly there is something brewing there with the induction of the new management that we saw over the past 1.5 to 2 years. The company, after its Q1 earnings, which were also quite strong, they have indicated they're trying to now boost production in or their activity in rare minerals or rare earth minerals going ahead. That is one play that GMDC is clearly getting into. It has hired external consultancy firm. It had hired an external consultancy firm to revamp the entire organization structure, tell it about new growth avenues going ahead. I think, Santo, ever since the new management has come in, the earnings performance and the stock performance has moved in tandem, and they have recovered in tandem. And going ahead, clearly, the company is hoping to boost its lignite production to about 10 million tons per annum from about 7.5 to 8 million tons currently. And also, the next key trigger for the stock could be the extension of the tenure of Lupin Singh, who joined, as a director of the company, has been leading steering the company over the past 1.5 to 2 years. I think a lot of the people out there, or a lot of investors out there, would want to see his tenure extended and hopefully keep on doing the good things that he is doing.
Well, a lot of positive things have been happening in the company, CJ. I'll give you that. Big jump in top line very clearly over the last couple of quarters. On the margin front also, the company has delivered. But the main thing, if you see over the longer term, I think there is bound to be some skepticism from investors
Of
and
course,
the
the
market as
PSU
well.
tag is
Exactly,
also
and the
there.
stock has not performed for a very long time now. In fact, it has not closed about 220 rupees in almost 10 years now. So that's quite a long time. So I think the market probably would be looking at a mix of two things. One is that whether the stock is able to this time really get past its previous high, and also whether the renewed the turnaround in performance, if it's just a flash in the pan or is it going to sustain, that will be the key question that
Yeah,
investors
Santo,
will
I
have.
think clearly now, of course, that 220 level is the next big hurdle for the company. And hopefully, if the earnings delivery come in, then probably 220 would look like a dot, given the stock would be so
Yeah,
far
the
ahead.
book value, it's quoting at little over book value at this point in
Yeah.
time, and the trailing valuation is just about 8 times 12-month trailing price to earning multiple, which is also pretty reasonable. But at this point, I think market is still waiting for some more confirmation.
Well, Santo, let's quickly just take a quick look if we have seen a decent recovery. Yes, we have. It seems like we have almost half the losses that we started off in the morning. Right now, the Nifty is down about just 80 odd points. So clearly, there's been a little bit of buying coming in. Even the India VIX has moderated quite sharply. It was higher by about 4.5%, now up by about 1.5% only. And the sharpest recovery, Santo, has come in the Nifty small cap. It's now down only 0.2% after falling as much as 0.9% at the opening bell.
Well, tech stocks continue to be under pressure. With that, well, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and do let us know about your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live at 3 p.m. with all the day's action. Till then, have a great trading session.